Here is how my firm helped correct payouts and fix the sales figures of a yoga studio business using QuickBooks Online. This business uses Mariana Tech as their merchant platform to collect payments for their services. This is similar to Stripe, Shopify, Etsy, MindBody, or any other payment platforms that collects payment first before the payments are transferred to the owner's bank account. Once a sale is made, the payments are collected in Mariana Tech and then transferred into their bank account based on the set interval. This interval can be daily, weekly, or monthly. What's common with this type of payment collection is that most business owners will record the payouts that come into their bank account as sales in QuickBooks and even include sales tax to it. Unfortunately, this is wrong and it gives a skewed result for your actual sales and taxes collected. Let me show you why. Let's take this yoga studio business as an example. They sell yoga classes for $300 a month plus HST. The total that Mariana Tech collects from a customer for this service is $339. This is the sum of sales plus HST. Say Mariana Tech charges a 5% service fee on sales. After a week, Mariana will deposit an amount of $322.31 into the business owner's bank account. This is the difference between the total sales amount minus the 5% service fee. In QuickBooks, if the business owner records this $322.31 as sales with HST included, QuickBooks will calculate sales to be $285.23 and HST to be $37.08, which is completely wrong. Instead, in QuickBooks, the sales should be $300.39 for tax. So what's the proper way to record payouts in QuickBooks Online? It's simple really, and it requires two major steps. The first step is to categorize all the payouts to a clearing account, and the second step is manually record the sales, taxes, and services fees from the source in which the funds were collected. In this case, the source would be from the Mariana sales reports. If done correctly, you will accurately record sales and taxes as well as see how much fees your merchant collects. Let's start with the first step, categorizing all the payouts to a clearing account. This is done first, creating a clearing account in your chart of accounts. A clearing account is basically a temporary bank account used for the business. In this case, the clearing account will be the Mariana Tech merchant account. We can create a clearing account by clicking Transactions on the side panel, then Chart of Accounts. Next, click New to add a new category. We will create the clearing account as a bank account and name it Mariana Tech Clearing. Now, every time a payout is received into the business owner's checking accounts, it will be categorized as a transfer from Mariana Clearing to the business owner's checking bank account. You can also create a bank rule to automate this process. The next step is to create an account for sales and the Mariana Tech service fees. For most, there should already be a sales account created for you in QuickBooks. For the service fees, you can create an expense account called Merchant or Services Fees. Once the sales and fee accounts have been created, we now need to download the sales reports from Mariana Tech in order to record the sales and fees in QuickBooks. A typical sales report from a merchant platform will have the following elements: the date, description of the sales, sales taxes collected, gross amount, net amount, shipping fees, and service fees. To be accurate, the sales report will be generated for each month we are doing the bookkeeping for. We will then enter each report as a sales receipt in QuickBooks. You can also enter this as a deposit, journal entry, or even an invoice. To do this, click the New button and under Customers, click Sales Receipt. Enter the customer for the receipt. We can make a new customer titled Mariana Tech Sales. For the date, enter the month-end date as shown on the report you downloaded. For deposit to, change to the Mariana Tech Clearing bank account that you created previously. Now add a line item for the gross total sales and calculate the sales taxes associated with the gross total sales. In a new line, subtract the service fees. This can be represented with a negative number. Generally, these service fees should not have any taxes associated with them. You know you've done the entry correctly if the amount on your sales receipt matches the net amount in the report that was deposited into your bank account. Once satisfied with your entry, you can click Save and repeat the process for other months. When done, we can check out the profit and loss report to see the actual sales figures. And that's how to properly record payouts in QuickBooks if you are using a payment merchant platform to collect sales. If you're a small business in Canada looking for a similar service, book a free consult using the link in the description or by visiting paperlessbooks.ca. Don't forget to like and subscribe for more videos like this. See you on the next video.